Hi there, welcome to Nebby Invest. Today, I'm going to talk about a company called Next Science. I believe this is an American-based company, and the reason they decided to IPO on the Australian Exchange was because two of the major benefactors were Australian. So this is a medical technology company that reduces the impact of biofilm-based infections in human using their technology called XBio. They have at least 4 products on the market right now, primarily used in stuff like surgeries, and they should have more products coming onto the market in the next few years. Now, they did take a bit of a hit during COVID-19 pandemic simply because their products are used in surgeries a lot, and the amount of surgeries took a bit of a nosedive during the pandemic. But we should see surgeries be on the rebound, bouncing back over the next year. So let's get into looking at Next Science's Appendix 4C. Next Science did IPO on the ASX in early 2019, if I remember correctly. And when they did IPO, did have a really high valuation. And right now, the market cap is 316 million. So if you go back 2 years, and you can see this in the chart when I show you in a few slides, their market cap was considerably higher. And even though I did like where they were headed, it was just the valuation that kept me away from even thinking about taking a position in this company. But that valuation has pulled back, and we're starting to see Next Science gain some traction when it comes to their revenue and cash receipts. So in the financial year 20, the cash receipt or the revenue was 4.5 million and highly operational cash flow negative during that year, minus 15.5. So if I calculate the price of sales of this company, it's at 70 now. But in saying that, they should be really ramping up those revenues in the next year or so. In fact, when I show you their Appendix 4C, you'll know or you'll see that their cash receipts for the most recent quarter were almost equal to the revenue of all financial year 20. So let's get into looking at their operational cash flow. And something I should mention before I get into the cash flows from operating activities, in this report, these numbers are quoted in American dollars. And when I showed you in the previous slide, revenue and operational cash flow, those are numbers quoted as Australian dollars. So even though receipts from customers for the most recent quarter were 3.4 million American dollars, that is almost the same as saying 4.5 million Australian dollars. When I said in the previous slide that the receipts for this quarter were almost the same as the whole year revenue for the previous financial year, that's why. The number's a little bit different, but it's because there's different currencies at play here. So of course, the first thing I always look at when I look at an Appendix 4C is go straight to receipts from customers. I've already mentioned their receipts, and that's significantly higher than the previous quarter. And more importantly, when you go to the bottom line, this company is almost approaching being operational cash flow positive. So in the previous year, highly operational cash flow negative by 15.5 million Australian dollars. And they've reined in some of those costs, and they have become almost, we'll say they're operational cash flow neutral at this point in time. And because they are operational cash flow neutral, they haven't burned a lot of cash in the previous quarter. So in fact, the cash on hand by the end of the quarter was still 15.1 million. Now, something to keep in mind here, we did see a significant growth in receipts from the previous quarter to this quarter, but revenue was almost the same. So there is a difference between revenue and receipts from customers, because receipts from customers is cash and revenue is not cash. So that's why you can have different numbers when it comes to revenue compared to receipts from customers. And my favorite thing to look at when companies release their Appendix 4C is to see the trend in receipts. So going back to July 2019, just after they IPO'd on the ASX, we can see what's been happening with receipts for this company. Quite lumpy, but this company was significantly affected by COVID-19. You can see that in the receipts in October 2020 and January 21, down to 130,000 and 280,000. Also very important to point out here, you can definitely see the difference between revenue and receipts when it comes to the previous 2 quarters. So they mentioned in the January 21 quarter, they did receive $2.4 million in revenue, but only $280,000 in receipts. And in this quarter, they had $3.3 million in receipts and about $2.3 million in revenue. So a lot of the revenue they recognized in the previous quarter came through in this quarter as cash flow, and that's why you have a discrepancy between revenue and receipts. They have grown their cash receipts by 15.5% per quarter since July 2019. Take that with a grain of salt because we have seen receipts quite lumpy, because if I took the compound quarterly growth rate in the previous quarter, it would have been negative. So how did the market react to the Appendix 4C? A very interesting story. In fact, I love looking at this and seeing how the market reacted not only on this day, but then on subsequent days, and also to see how some financing or investing services reacted as well. And we've got a little quote here from Motley Fool, an article they wrote talking about why the Next Science share price was sinking 6% lower on the day they released this Appendix 4C. So Next Science released it at 10:14 a.m. and the share price went lower by 4%. But that's not the whole story. You sometimes see this where the market reacts quite subdued when a company releases their Appendix 4C. But then the following day, it seems like the market has time to digest the announcement, and that's when they get excited. And this is exactly what happened to Next Science, because on the following day, the share price increased 13% on greater volume. So when Motley Fool says, why is the share price sinking 6% lower on the day they released Appendix 4C? And then they mention a few reasons. They in fact mention lower revenue, even though cash receipts went up. Sometimes just put that aside and just be patient. Look what happens in subsequent days. But when I look at the chart for Next Science, this is the one-day daily chart over about a 3-month period. It does look fairly bullish. And in fact, it looks like the share price is starting to turn around. Sentiment is improving with this company, and we are starting to see a potential new uptrend developing. And you can definitely see this potential breakout in Next Science share price when you look at the weekly chart. So when Next Science IPO'd on the ASX, the market got really excited about this company. So they IPO'd at just under $1.50, and the share price went up from $1.50 to a high of $4.50 in about, we'll say 2 or 3 months. So that's a 3-bagger in that period of time. So I do remember this, and at that time I was wondering, why is the market getting so excited about this company? And then what happened then? The market got, well, all that excitement sort of waned, and whenever that excitement wanes, when a company IPOs, you always see the share price drift back, and we have seen that with Next Science. So the share price has drifted back from $4.50 to a low of around $1, and that was around March 2020. And then we saw the share price just consolidate in between $1 and $1.50 for about 7-8 months. That's actually very healthy. And sometimes when share price is consolidating, what I'm waiting for is a breakout to the upside or the downside. And we might have seen that breakout to the upside in the past week as the share price raised or rushed above $1.50. So this is a potential buy for me, because they have two things going for them. The share price looks like it is breaking out. A new uptrend is developing. I also like what the company does, and I do believe we might see significant growth in their revenue and cash receipts over the next few years. So this is a potential long-term buy for me. And to really emphasize that there is a potential breakout in Next Science share price, I just want to look at the 1-year weekly chart so you can really see what's happening with the share price and the volume and the moving averages. So I've only included 2 moving averages here, and that's the 10-week moving average and the 20-week moving average. And we have seen the 10-week moving average move above the 20-week moving average in about 4 weeks ago, which was showing you there was a potential turnaround, a shift in sentiment in the share price. And we definitely saw that over the past week. The share price broke above a resistance level at just above $1.40 on good volume as well. I would love to see a pullback towards $1.40, and we might be seeing that now. I just looked at the share price a minute or so ago, and it was about $1.48 and pulling back. So hopefully it does get to that point, because that would be a low risk buy for me. So all eyes on Next Science over the next few days. And that's all I've got on this quick take Appendix 4C video for Next Science. If you have any questions about this company or about anything else, make sure you leave a comment in the comment section, and I will answer them. I'm becoming better at answering comments in the comment section. So other than that, I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. Otherwise, that's all for this video. Have a good day. Bye.